Well, good afternoon, everyone. We're so glad that you're here. We're going to get started because we have a great agenda this afternoon, lots of great information, and we want to make sure that we are respectful of your time with us this afternoon. My name is Allison Goebel. I am the Executive Director of the Greater Ohio Policy Center, and I am today moderating our awesome webinar, which is called Innovative Approaches to Preserving and Expanding Homeownership. I want to start by acknowledging JPMorganChase, whose generous support of our organization is enabling us to offer this excellent learning opportunity to you today. So thank you, Chase. Our organization at GOPC, our vision is a vibrant Ohio, and a key component of achieving that vision is plentiful opportunities for families and individuals to own their own homes. We know that housing costs have dramatically escalated in recent years, and the communities in Ohio and beyond are struggling to build modestly priced quality housing products. So we're thrilled to showcase today approaches that are helping both ease the burden of trying to get the challenges to get into home ownership, and the also offering solutions that are keeping existing homeowners in their homes, as well as tools and strategies that we're going to make homeownership a reality for new owners. So I'm joined today by Jacques McKee with JPMorganChase, Ashley Montana, recently with the Franklinton Development Association, Valerie Daly with LISC Greater Cincinnati, Greg Prelka with Believe Mortgage, and Carly Booz with the Affordable Housing Alliance of Central Ohio. These leaders in the housing field will share promising tools and strategies for preserving and expanding homeownership opportunities. Before we jump in, I'm going to run through just a few bits of housekeeping and then we will get started. We ask everyone to keep yourself on mute and your video off just to really kind of reduce distractions. We are, as you heard as you came in, we are recording this webinar. We will be posting it on to GOPC's YouTube channel next week. We will share out that link if you are unable to attend or unable to stick all the way through and want to share it with friends. We will make the slides available after the presentation as well. Those will be found on our website along with the link to the video, so all packaged in one place. If you have questions as our presenters are sharing their awesome information, drop them into the chat. We'll try to get to them sort of in the flow of conversation, but we also are reserving the last 15 minutes of today's webinar to really dig into those questions. So questions will start about 1:55, a little before 2 o'clock, and that'll give us plenty of time, I hope, to get through most of those. At this point, I would like to invite Jacques McKee, the Vice President of Public Engagement for JPMorgan Chase's Midwest region and a board member at GOPC, to provide some opening remarks. Thanks, Jacques.
Thanks, Allison. So first of all, I want to thank Allison and the GOPC team for bringing this panel together and for all of you for joining this important conversation around preserving and expanding homeownership. I'll start by saying most people really aren't aware that JPMorganChase has been a part of Ohio's history for a really long time, more than 210 years to be exact. So think mergers and acquisitions. And, if you're following banking news the last week or so, there's a lot of that going on in our region. So, here in Ohio, we are 19,000 strong, and we're all proud to call Ohio home. And, we're even more proud to work alongside many of you that are on the call today to help our communities grow and thrive. So, as one of the state's largest private employers, we recognize that our business is only as strong as the communities that we serve. We know a strong community starts at that neighborhood level, and safe, affordable housing is at the center of that. We know that's what anchors families. We know that's what promotes generational wealth building, and that ultimately fuels the local economy. So, we're a large organization, a global organization. We know that, but we take a local approach when it comes to homeownership. So, a few things firm-wide that we do. I'll start there. We're really have enhanced our product set to expand our access to credit for homeownership. We're also providing critical financing for housing creation and preservation. We're backing innovative, scalable housing solutions through our low-cost loans. I'm really proud of what we're doing on the equity side. So think about, the Ohio Capital Corps out there, the largest equity provider in the state. We're the largest investor in Ohio Capital Corp. I know 105 million this year. I think we hit the billion mark a couple of years ago. There was a newspaper article written on it. So a lot of activity in that space. And then also on the philanthropic side with our philanthropic commitments, we've got Carly's on the line. I hope we hear more about what Convergence Columbus is doing. Really proud of that investment as we learn, homeownership on the local level here in Columbus, but taking those lessons to the region, ultimately to the state, and maybe even around the country as we learn more from that amazing program. So here in Ohio, we have hundreds of home lending advisors. That's what we call them, that are helping folks with mortgages. They're in our branches. They're in our call centers, even helping folks do a mortgage over the phone. It's not for everyone, but that's how I did my last mortgage. But we also have what are called community home lending advisors. They're also lending advisors, but they help guide residents through that homeowner process. They help them with finding down payment assistance programs, which I hope we hear more about today, and those tools and resources that are really important to help get more folks in homes. It's really about helping them navigate that homeownership process, and we know that's so important, especially when you're talking about first-time home buyers or folks just aren't super familiar and comfortable with that process. So having said all that, we know there's more to do, but we're really proud to partner with policymakers, nonprofits, folks like yourself on the phone to make homeownership more accessible and sustainable. Let's keep folks in their homes all around Ohio. So I want to thank you all for joining, and I'm looking forward to the conversations that we're going to have here today. Allison, I'll turn it back over to you to kick us off.
Jacques, wonderful. Thank you so much again for JP Morgan Chase's support of both this webinar and the broader work that's going on across the state. I'm going to ask Ashley to start us off to talk about the work that she has been doing within a rapidly changing neighborhood in Columbus. We in that neighborhood, we're seeing lots of new market rate development as well as unwanted real estate investor activity. And so Ashley's going to describe how the CDC that she has recently been with has helped to keep homeowners in their homes and houses and make sure that houses that are being sold to other homeowners. So as Ashley gets started, I'll make sure to pull up her slides. So just give me 1 second.
Thank you, Allison. Good afternoon, everyone. All right, as Allison shared, my name is Ashley Montana, and as she's kind of hinted, I recently left Franklinton Development Association. Friday was my last day after almost 9 years with the organization, and so I'm going to be talking about my work as the Director of Community Engagement at Franklinton Development Association. But first, I'm just going to give you a little bit of an overview about our organization and the work that we do in the Franklinton neighborhood of Columbus. Next slide, please. So our mission is to stabilize and positively impact the community through the lens of housing. So FDA was founded in 1993. It started as a board-led organization where board members were out there swinging hammers to build homes. Over the years, we've kind of evolved the mission to encompass more methods around homeownership, including financial literacy and neighborhood advocacy. The picture that you see here on the screen is a campaign we did a few years ago where we highlighted all the homes that we built in the Franklinton neighborhood. Our impact has created about 200 homes within the Franklinton community of Columbus, which is on Columbus's west side, if you're unfamiliar. So it's just west of downtown. Next slide, please. So as I mentioned, there's kind of 3 tiers that the FDA is focused on. First being affordable housing, so building and rehabbing homes in the neighborhood. Recently, FDA completed a project with Widow Cooper Companies called Starling Yard, which renovated the old Starling Middle School into 97 units of affordable housing. Another tier that we focus on is financial education. So we have a 6-week money management program called the Financial Life Skills Program that I oversaw while I was at FDA and has celebrated 700 graduates from the community since it started in 2018. So the goal there is really to prepare residents to be homeowner ready when it comes to that, and then connecting them with financial literacy resources. And then the last piece is the neighborhood advocacy, which is where the resource canvassing that I'm going to talk about today kind of falls into. In 2018, FDA founded a website, franklinton.org, to better connect residents to available resources and events in the community. And then in 2019, we also went on to manage hilltopusa.org. So you can go to both of those websites to get connected to different resources and events throughout the west side of Columbus. There's a newsletter that goes along with that. But one of the ways that we were looking to spread the news about these resources was through our resource canvassing. Next slide, please. So here you'll see some pictures from our resource canvassing. I had to include a little kitty in the fall scene here. And so we started our resource canvassing really in 2021, and then kind of pushed it forward in 2022. Next slide, please. So we actually started our resource canvassing by working with Celebrate One, which if you're unfamiliar with them, they're based here in Columbus, and it's the city's infant mortality task force. And so when partnering with Celebrate One, we would canvass the neighborhood, mainly trying to connect with families who are pregnant or parenting, and connect them with available resources. Through other partnerships, we started doing resource canvassing to share resources more widely. So in 2021, which is kind of when it kicked off, we canvassed just under 600 homes. And then in 2024, we canvassed almost 3,000 homes. One of the big ways that we were able to do that was through community partnerships, like working with the Ohio State Community Health Worker Program, which is a program out of the College of Nursing at The Ohio State University. It's a 14-week program that trains community health workers. And so the picture that you'll see here is me and my former coworker, Keita Smith, leading a canvas in the Hilltop neighborhood with community health worker students. And so each of the community health worker students has to get practicum hours where they're out in the community doing work. And so part of the way that we would work with them is they would get practicum hours through canvassing with us. Next slide, please. So this just really shows the impact specifically in Franklinton for canvassing. So one of the things that I'm going to be talking about in a few slides, you'll see is about implementation of the canvassing. And so one of the things I would recommend is kind of keeping track where you've canvassed. And so you'll see here the impact of canvassing from 2021 to 2024. You'll see several streets have been hit a couple times, and that's mainly through the Canvas and Cookout that we started in 2022. Our Canvas and Cookout event was mainly to connect folks with a neighborhood event called National Night Out. And so we would send them an invite for National Night Out, and then also connect them with other resources like our predatory buyer campaign, which I'll talk more about, and our resource website, franklinton.org. And next slide, please. And then one of the things that we kind of built upon from canvassing in Franklinton was also canvassing in the Hilltop neighborhood. So Hilltop is just west of Franklinton, and it's a much larger footprint. This is only like a small portion of the neighborhood. And so we really tried to focus more of our canvassing in this neighborhood through increased partnership opportunities. We also manage a resource website, hilltopusa.org. So our goal was to really do outreach for that as well. Next slide, please. This really just shows the impact over the years of our canvassing throughout the neighborhood. So you'll see the first year we just canvassed in Franklinton and then added Hilltop, and then Hilltop continued to grow. And then one of the highlights was this past year, we worked with a Southside organization, Southside Thrive, to launch or relaunch canvassing in their neighborhood. And so that's what you'll see illustrated in the green bar. Next slide, please. These are just some photos of our resource canvassing. This is another thing I'd recommend for implementation is to highlight your volunteers. So you'll see at the top left, that was one of our Canvas and Cook-Off events. So we usually have the largest group of volunteers there. And then all of these other ones were just ones that we had throughout the month, mostly with the OSU Community Health Worker Program. I do want to highlight the picture that you'll see with us holding the blue bags. So that was in partnership with Homes on the Hill. So Homes on the Hill is a community development corporation based in the Hilltop. And during that canvas, we actually helped them share information about a house that they were building in the neighborhood, and they were looking for a qualified home buyer. So that was one of the things that we passed out to neighbors during that canvas. But you'll see we do it across all seasons. You have like summer to winter there because you'll see our big coats. But it's always a good outing and a good way to see the neighborhood. Next slide, please. So specifically, I want to talk about our Beware Predatory Buyer campaign and how that relates to homeownership and preserving homeownership. So this actually started with Legal Aid of Southeast and Central Ohio. This was actually back when they were the Legal Aid Society of Columbus, as you'll see their old logo on the flyer there. So this door hanger was created kind of what Allison had shared earlier of like the neighborhood is changing. And so we want to make sure that people are aware of their rights. And we had heard stories of neighbors being really pressured to sell their homes to investors instead of trying to find homeownership opportunities in the community. And so we created these door hangers with legal aid. So it gives you just how to spot the red flags. I mean, most of us already know these. I've actually gotten a few of them the past week of like, you just get texts that will say like, hey, can I buy your home? Or calls. And they'll just say like, I'll give you a cash offer. And so it has those red flags. And then on the back of the door hanger, it explains kind of what you can do with those. And so it recommends contacting legal aid, but also your local CDC. So if you need assistance on kind of what to do, the contact information is there. I have one, I know it's a virtual webinar, but I have one here just to kind of show you. It's a pretty thick door hanger. And so the initial funding for this program was the Ohio Access to Justice Foundation, which was a result of the nationwide litigation against mortgage companies that helped cause the 2008 financial crisis. And the printing and production of these door hangers was led by legal aid, and then the distribution was led by FDA. Next slide, please. So next I'm going to talk about some best practices for implementation. So first I would recommend identifying community partners. So if you're looking at doing this in your community, it takes a village certainly. Like FDA has a really small team of just 4 now, but 5 while I was with the organization. So we can't do it all ourselves. So really just partnering with other organizations. So Legal Aid always had people from their team join us when we were doing the predatory buyer campaign. As I mentioned, we worked with the OSU Community Health Worker Program. You'll see one of the flyers in that bag. It's actually from the Columbus Metropolitan Library. Also looking for community partners of where to meet. So one of the things I'd recommend is meeting at public places like community parks or community rec centers. So that way you have a meeting location that can work for folks. I would also recommend assembling materials beforehand to make distribution and data easy. One of the things that we used to do is we would assemble everything and then we would count houses as we went. I am not a reliable counter that way. It is much more reliable assembling before and then counting what you have left over if you do. So I'd recommend assembling the materials ahead of time, which you can also do as a staff or with volunteers. I would use Google Maps and Canva to determine the route. So the images that you saw earlier of the lines on the map, that was just done in Canva with screenshots from Google Maps. I'd also recommend reviewing safety tips for volunteers. Most of the people that would volunteer with us were from the community, so they knew a little bit about their surroundings, but some of them did not. So we would recommend not leaving materials at houses with lock boxes, no soliciting or no trespassing signs. Making sure to secure items wherever you leave them so they don't create litter. Talking to neighbors when you're out passing out resources, just asking if they would like some. Most of the time they're going to say yes and strike up a conversation. And then just the mentality of staying in a group, kind of keeping an eye out for each other. One of the things that we also did while in the community is we removed predatory signage while out. We've probably all seen those "We Buy Houses" signs. I personally love to take those off the signs. They typically are predatory in practice. We would take those down. One of my favorite stories was it was a small campus, there were just three of us, but I had someone climb on the back of someone else to take it down because it was way up on a foam pole. And then also just recommending keeping track of the areas and the numbers of households canvassed so you can track the growth over the years. Next slide. And then this is contact information for FDA. So if you have any questions for the organization, as I mentioned, I just left because I'm transitioning to a new role, but I'd be happy to answer any questions. But you can find FDA online at franklintondevelopment.org and on social media as well. And then the last slide includes my contact information if you have any questions for me.
Ashley, thank you so much. And again, we'll make sure that your information is shared in the chat, and it's also, of course, available on the on our website. Thank you. This has been really super. It's nice to see high impact, relatively low cost ways that you're serving homeowners and preserving homeowner opportunities. I want to turn now to Valerie Daly with List Greater Cincinnati. We know that one of the challenges that communities sometimes face is having the legal paperwork that supports homeowner that is very clear about home ownership. And so List Cincinnati, Greater Cincinnati, and other List offices in Ohio and around the country are trying to approach this issue as well as other supportive measures. So I'm going to go back to sharing my screen, but as I do that, Valerie, please go ahead and please introduce yourself and get going.
Thank you, Allison. So I'm Valerie Daly, Director of Programs with LISC Greater Cincinnati. LISC is a national organization. I think some people might know best for some of the lending work we've done. We've invested hundreds of millions of dollars here in Greater Cincinnati. Go to the next slide. But we're a community development financial institution. So we help support residents, small businesses, different efforts throughout the country. And next slide. So as I mentioned, housing is really foundational for what LISC does. We've traditionally worked with larger loans that support a lot of affordable housing in our communities throughout the nation. We've had sort of a pivot or a recognition of the importance of helping homeowners remain in their homes. So we're really braiding together a couple of solutions and providing some home repair grant and loan support for under-resourced communities. And also what I'll be talking about here today is the Heirs Property Initiative that we've undertaken, which really helps support people that do have homeownership in their family now maintain that resource for generational wealth, as Jacques mentioned. Next slide. And I just want to paint the larger frame here. In Hamilton County, in the city of Cincinnati, LISC has been leading an effort called Housing Our Future, which is a collection of housing strategies to support all income housing, but especially affordable housing, from rental to home ownership. And LISC's role here that we've really honed in on over the last couple of years is specifically supporting and protecting homeowners and their investment. So altogether, our investment will be $10 million over a couple of years through grant programs, Flood Safe Ohio program. We're wrapping up here in Hamilton County currently. And then we have launched a home repair loan program that's providing 2% interest repair support for low and moderate income homeowners. Next slide. And as you can see, we've recognized that we can invest in home repairs, critical repairs that folks need to fix up their house. But if we don't also look at making sure that folks have a way to protect that investment, we're not really serving a family holistically. So we really do see this heirs and estate planning work as part of that collective support for homeownership. Next slide. So what is heirs property? You might refer to it as tangled title. You might hear that phrase, but put simply, and I am no lawyer, we have legal services that support us with this work. It's when you have So an example might be a mom passes away, a couple of children live in the home, but there's no legal documentation that shows that the mom intended to pass that property, that home, on to siblings. And so it creates a lot of uncertainty. It opens up a lot of potential threats for the remaining kids in that situation. So there's no legal title, no legal documentation to transfer the property. Next slide. And here's a little graphic to help explain this. With an estate plan or a transfer on deed in some states or different mechanisms, when a person passes, they've made their wishes clear, the property passes with little effort. But we're really talking about cases where there is no estate plan or that heirs property has already happened. And in a lot of cases, this opens up a family, different folks that may think they have ownership of the home, an unclear path, and potentially opens them up to investors and loss of value in their home. Next slide. And I think a lot of, if folks are familiar with heirs property, you might think of our Jacksonville, Florida office is really taking the lead in this work. I think a lot of us think of heirs property being an issue in the South, but it really is a nationwide issue. So here in Ohio, we have approximately 9,000 heirs or most likely heirs properties. And that most likely heirs properties is based on 4 characteristics. If a property shows those 4 characteristics, it very may likely be an heirs property. And Ohio is actually in the top 5 in states in the nation. So I think that's interesting. Well, we're not at the top of the list for heirs, that potential heirs we are. And so what does this mean for families? It means that $313 million of home value is at stake for these families, right? For an individual family, that can mean a lot. So while in an heirs case, the family members living there may have to pay taxes and do all the things that homeowners do, they often don't have access to things like a home repair loan program or a grant program, or they need to show title to the property, or the incentives that homeowners have. As I've mentioned, we have seen this really as a complement to our home repair programs. And I think one really unique aspect of our approach to this heirs work is supporting that clearing of title, like the very intense probate work, but also working on the front end with estate planning to ensure that hopefully we don't get to the point where there's an heirs property to deal with. And we are working with United Way here locally to understand what that number is, right? I think we all want to be data driven and data oriented. And I can share some of the early findings. We've got a little over 1,000 heirs, unlikely heirs, which feels small, but to me feels manageable, right? We can make a real impact with that number. And there's really, I think, surprising to some of us in communities where we might assume these heirs cases take place in some of our more urban communities, the city of Cincinnati here in Hamilton County, they really are spread throughout the entire county. So it really is a countywide issue that we're facing. Next slide. So what is LISC doing about this here? So we received a generous grant from US Bank Foundation Opportunity Fund to support this work in Cleveland and Cincinnati. So our local goal in Hamilton County is to support 150 low and moderate income families with legal services, both the estate planning and the probate litigation. And I'll go on to the next slide. I can describe some of the outcomes that we've seen so far. So you can see estate planning, our goal is 125 for people helping with estate planning, deeds, different kind of work around estate planning preemptively. And we've already been able to assist 77 folks. These are open cases. And then probate litigation, our goal was 25. I should mention our partners here are Legal Aid Society of Cincinnati. Shout out to the legal aids here. And in this presentation, we've opened 69 cases and closed 30 in just 9 months. And so this work really is, the longest case took 8 months of dedicated staff time to work on. The average has been about 3 months. But we've really been very successful in reaching out to those homeowners that need this assistance and partnering with them. Next slide. And here's just a demonstration. This is my very low tech way to show the impact that we've had. The sort of central white area is the city of Cincinnati, and then the jurisdictions are in the light blue. And you can see that it really is dispersed throughout the entire county. I've been surprised at this. This is what our home repair grant and loan programs have looked like as well. I think we often think about it being a city of Cincinnati issue, but it really is more widespread, the support that homeowners need throughout the county. But and just some reflections in our first 9 months. It's been clear in different formats different conversations I've been a part of. It really takes the right legal partner to assist you with this work. It is time intensive. I mentioned 8 months, the average is 3 months. Legal aid folks are going out to the homes of these homeowners to help them through a whole process, Medicare recovery estates, a whole series of different challenges that homeowners are facing to ensure that they get to clear title. We heard a lot in the last presentation about community engagement and canvassing and being on the ground and having those partnerships with communities. That is really essential, especially when we're asking people to talk about estate planning. So we need to focus on those organizations and residents that have real deep community connections. And then the referral pipeline. The most interesting part, I think, so far for us is the estate planning has been a harder sell than the probate because folks just don't want to talk about what happens when they're gone. So finding the opportune time to have those conversations and the partners that can help connect those homeowners is key. Community resource navigators are needed to help direct folks to let them know that these services exist, but then also some of that one-on-one support throughout the process. I mentioned the next point. And then I love data, I love maps, I am a researcher at heart, but we did not have a good sense of what was happening locally. We knew from our partners that this is an issue that people are facing, but I think the advice is just get started. We know it's an issue. We led with legal services and the direct support, and then are following on with the data to help inform where we do more targeted outreach, but just get started.
Valerie, wonderful. Thank you for that run through. We'll be very excited to see this program continue to evolve and have impact. You'll have to come back next year and report out on some other outcomes.
Thanks, Allison.
Thank you. I'm going to move from Cincinnati and take us up to Cleveland, where Believe Mortgage is headquartered. Greg Peralta is here to talk about the Believe Mortgage product, but also the broader work that CHN Housing Partners does, which is the parent company for Believe Mortgage. So Greg, go ahead and get started while I get the slide deck up, please.
Well, thank you, Allison. Welcome, everyone. It's great to be here today, and it's great information to be able to share as a panel. As we're talking through believing in homeownership, really for CHN Housing Partners, our parent company, it's been since 1981. And if you go to the next slide, you'll see that we were founded by 6 Cleveland CDCs and nonprofit affordable housing developer, housing services provided with residential lending headquartered here in Cleveland, operations in Detroit and Pittsburgh. Our mission is really to leverage the power of affordable, stable housing, and it's our motto of a power of a permanent address. We partner with sister nonprofits, government entities, financial institutions, other like-minded institutions, if you will, to improve housing stability and homeownership opportunities. And we serve over 60,000 annually. We own, manage 2,500 units. We've developed over 7,100 homes and helped 3,900 families become successful homeowners. And then I'll be talking mainly about Believe Mortgage, our CDFI that I run here in Cleveland. And we originate both in Ohio and Michigan in an independent residential mortgage lender since 2019. Next slide. So you asked, why did we form the organization, really Believe Mortgage, also known as CHN Housing Capital? Because we understand there's a critical need for affordable homeownership. And so really, when you think about homeownership being a cornerstone for wealth building, financial stability, it is really essential, right, to address these gaps within our communities. And so as a CDFI, we really looked at Northeast Ohio. We wanted to penetrate both Cuyahoga County and Lorain County, and to help really increase access to Black and brown families within our communities. So really making homeownership attainable is particularly important in Cleveland, one of the poorest cities in America. Next slide. So as we said, our parent company, Housing Partners, as well as Believe Mortgage, which we changed our name this year back in April, we're focused on eliminating barriers across the full spectrum of homeownership pathways. We do that with our products, very innovative and creative products, and I'll talk about a couple of those here in a moment. And really just giving that access, especially products, to be able to help people purchase their dream homes in Ohio or Michigan. And then also education. We provide financial coaching, homebuyer education, which is free to our customers, so that it really allows them to become financially ready for sustainable homeownership. And then we all know that one of the greatest barriers has been inventory the last 3 years, and a really affordable, safe inventory, if you will. And so we want to foster home ownership opportunities by creating inventory through rehab and new construction. We support asset quality, sustainable home ownership by addressing existing asset quality through home repair. So we manage many different home repair programs within Northeast Ohio as well. Next slide. So as we stated, our Believe Mortgage is a nonprofit community lender established back in 2019. Full service approach, eliminating these barriers. As a CDFI, we do correspondent agreements where we're selling to regional banks, as well as a credit union that is down in Durham, North Carolina, another CDFI that's like-minded as Believe Mortgage. We really do manage through down payment assistance, home repair loans, which I've mentioned before, making purchasing your home easily with our first mortgage products, and then counseling and education. Next slide. So one of our flagship products is called the Believe Mortgage, and obviously it also mirrors the name of our CDFI on purpose, but we all do believe that individuals should have the opportunity to purchase their dream home. And so this Believe Mortgage, we did partner with our investors, and really it's different than just a regular CRA mortgage, if you will, because we wanted to make sure that with purpose and innovation, we could help individuals overcome the barriers that they're seeing in homeownership. And so it is a conventional first mortgage purchase product, and it does allow our individuals to get it within reach of, really the markets that they were being left out of. So our credit scores can go as low as 570, and that's to, again, flexibly address credit challenges that we see in the market. Doesn't mean that every single person with a 570 FICO score is going to get a loan. There's other compensating factors, but again, it doesn't just strike them out of the conversation. And so we definitely want to work with them. Down payments as low as 3% to address the lack of savings in the communities that we serve. And you're not required to pay any private mortgage insurance. So we're not penalizing the borrower for a lower down payment. And then what's also nice is there's a flexible seller credit up to 7%. So seller concessions up to 7%, really unheard of. But what we have found is that it will incentivize both deal closure, if there's repairs that are needed, if landlords are selling to their tenants. We've seen a lot of great success stories where landlords want to sell to their tenants. They provide the 7% credit, and 2% of that 7% can be applied towards the borrower's down payment. So they only have to come up with 1% of their own funds. And so this particular product, we did this through a correspondent agreement, and it's a third-party origination channel. We are non-delegated. What that means is that we go ahead and originate in our name. We allow the investor to co-underwrite with us. We close the loan in our name, and then we sell it back to that investor on the secondary market within about 15 days. And it allows, many of these regional banks then to get their CRA exposure and credit in regards to the neighborhoods that they serve. So really what we wanted to do was eliminate the barriers around credit score and lack of savings. Next slide. And so this particular product, the Believe 100, we created this one because of the help of JPMorganChase. I'm on a national committee that is through the Housing Partnership Network. Other like-minded CDFIs, we created this program over a 2-year period. It allows for a borrower, once again, on a 30-year fixed loan. It's conventional. It must be owner-occupied. We can do this loan all throughout Ohio, and so it's not limited to Northeast Ohio. There's no LMI income or census tract requirements, and we can go from $50,000 up to the Fannie Mae conforming loan limits of $806,500. So we've done small dollar loans all the way up to really $650,000 was our highest loan amount. So we're helping both LMI neighborhoods, even though there is no requirement, and we can also help middle to higher income neighborhoods as well. No mortgage insurance, up to a 3% seller contribution, and you're not required to be a first-time home buyer, but you do need to complete the HUD homebuyer classes, which we offer here. And then if you put 3% down or more, you need to have a 640 FICO or higher. At 0% down with no MI, you need to have a 660 FICO or higher. So again, we're eliminating high interest rates as well as lack of savings. If we go to the next slide. So really our approach, right, why is it different than the market? You know, we directly engage with realtors, realtists, stakeholders that are serving majority minority communities on purpose as our mission. We want to drive those opportunities for minority borrowers in majority minority communities. We work with a thoughtful appraisal management firm where we haven't seen any gaps in appraisals since we've launched the Believe Mortgage back in 2021. They've either appraised at or above purchase price. Again, and we do that because the appraisers live in our communities and they understand the houses that our borrowers are trying to purchase. And then we are recognized really statewide, even nationwide now, as a community-based nonprofit with a respected mission and a long track record. Next slide. So another thing that we do that's out of the ordinary is that we have a homeownership center that if a customer comes in, they can actually see where they are in the process, whether they are maybe mortgage ready, where they go right to a loan officer for purchase. Maybe they're near ready, where they still need some work on credit and maybe savings. And then we also say, let's make a plan. And so maybe we even hold the hand of this borrower for a couple of years before they're ready to purchase a property. Next slide. So some of our overall impact, you know, when you talk about our Believe Mortgage, we've helped 159 people for 19.4 million to actually obtain housing since April of 2021. We also have a lease purchase program where we have year 16 first mortgages. We have over 8.5 million that have funded within that alone. And then during the time of the pandemic, we, as a CDFI, received equitable recovery program funds that we utilize as a DPA program, down payment assistance. We assisted 60 families to be able to get into homes that they were searching for. Next slide. So what are some of the unexpected challenges that we've seen? And I think everyone on this call also understands, right? The market has experienced unpredictably higher interest rates, increased purchase prices, very low affordable housing inventory for the past 3 years. And then we're also seeing now the tightening of credit policies really led to risk-averse lenders and investors compared to when we created our Believe Mortgage product 5 years ago. So this really has given us a competitive advantage to be able to utilize even our Believe 100 mortgage here in this market. Next slide. And so some of the things that I think is a high level for you to see is that as a CDFI, we have removed those barriers. 96% of our borrowers have been African American or Latino. 47% of borrowers have been single mothers trying to get safe housing for their children. 88% of borrowers have been low income with household incomes at or below 80% AMI. Average income's been right under 45,000. And then 98% of our borrowers have been first-time home buyers. Next slide. So we continue to look at just opportunities to develop our new residential products. Next 3 years, we're looking to become a Fannie Mae, Freddie Mac seller servicer. to be able to provide additional options for borrowers to place them into first mortgage programs that are competitive. And then we'll continue to manage down payment assistance funds for local government entities. Knowing that there is a shortage of safe, affordable housing with our communities, we're also looking to do acquisition rehab and new construction opportunities within our markets. Next slide. Here's just the contact information. If you want to learn more, you can even go to believemortgage.org and you'll see all of our products on the site as well. Thank you.
Greg, thank you. This is exciting. I'm also just very thrilled that this is a product that's available across the entire state of Ohio, because we know that mortgages are very hard to come by, particularly in just in areas that have and with to families who have historically been shut out. So we're very excited about this.
Thank you.
Speaking of, there's another potential mortgage product or financing product on the horizon that is being workshopped by Affordable Housing Alliance of Central Ohio, and Carly Booz is going to talk about that here next. Carly, do you mind getting started while I pull up your slides?
Absolutely. Thank you so much, Allison. And yes, just to reiterate, you guys are very much getting a sneak peek. This is not a product that exists yet, but we think that we're in the final stages of designing it and then moving very quickly into being able to fundraise for it and operationalize it and put it out into the world. So I should be clear too, though. I am speaking not just kind of as the executive director at HACA, which is a job that I love, but also as a member of Convergence Columbus, which is its own coalition. It's got 120 different members today, all of whom are working on just one part of our housing problem. The only thing that they are focused on every day is how we close the Black, minority, and underserved homeownership gaps in our community. So it's kind of a kitchen sink approach. They're doing a lot of really different things. If you haven't seen the Bloom 614 website, check it out. That is one of their tools, and it's amazing as well. One of the things that they have found is that we really don't yet have the full plethora of mortgage products and down payment programs that we need to be able to get through this particular tough patch in Central Ohio's housing market. So if you want to begin advancing, I'll go into the slides. One of the background notes is that among the other tools that they've helped bring to market in the last 3 or so years is about $6 million worth of new down payment assistance programs. So this is beyond kind of the traditional home funds that city and local governments are able to contribute. This is really working in partnership with private sector actors and the national government to be able to expand the offerings we have for people who are just kind of sitting right above the cusp of mortgageability, right? Just a little bit too high of a DTI or a little bit too little of a down payment savings. And those programs have been phenomenal. In fact, over just the last 3 years, we have actually been able to close our Black home ownership gap by 4 percentage points. And this is a gap that has existed in Central Ohio since the day the Fair Housing Act has passed and has been getting larger and larger and larger until this coalition came around. And certainly you can't give all credit to the work that they're doing, but it is that totality of approaches that's making this happen. The challenge, though, is that those down payment assistance programs, they come and they go as fast as you can imagine. As soon as we open the door and we begin taking applications, we get 100 families who run the door and try and get in, and they're funded and they're closed, and then the resource is gone. So the challenge that we've been trying to work through with that is how can we create something that mimics the effects of down payment assistance, but is sustainable and recyclable. We can get one-time resources and use those in perpetuity to keep the doors open to everybody who needs it. And that's where the shared appreciation mortgage concept really came in. So SAMs are not totally new. If there's anybody on the call who survived, the interest rate environment of the 1970s and early 80s, you're probably really familiar with it. It's a kind of tried and true program for a high interest rate environment. We just haven't had this high of an interest rate environment in the last 30 or 40 years to kind of need to dust it off and take a look at it again. But when we were creating it, we did. Generally speaking, what a SAM is, it's a zero interest down payment loan. It's a silent second, so to speak. And by being able to come in with that silent second, you reduce the size of the first mortgage. So you're shrinking the PI that borrower is paying, and you're creating a more affordable payment somewhat naturally. And if you can get that shared appreciation mortgage to be large enough to be about 20% of the purchase price, you can take out PMI. So that can unlock another $200, $300 worth of savings on the monthly bill. Now, it is a loan. The shared appreciation mortgage is not a grant, it is not forgivable. But instead of making payments over the course of the loan, over the next 30 years, it just sits there and waits until the day that you decide to sell that home, which we know is usually in, year 7, year 10, based on the normal family cycle of homeownership. When you do choose to sell, then you have to pay back the loan as you would any other lending product. And instead of making some sort of interest payment or paying a fee, you split the appreciation with that nonprofit administrator. So it's a skin in the game sort of program. Go ahead and jump to the next one. And you can even keep going because I'm just wheeling and dealing over here and not following my slides as strictly as I probably should. When we began looking at this, we really wanted to know who had active SAM programs already. California's Dream for All is a statewide program. It's operated by their housing finance agency. It is by far and away the largest program. I believe it has now done over $1 billion worth of mortgage lending just on that second. The oldest program is in Arlington, Virginia. They have been using home funds to do this since the 70s. And we are seeing a lot of kind of new evolution. Some of them really interesting. Colorado, for instance, is doing it through private equity and operating as a special purpose credit program. We are also seeing scammers enter this market and do so in a way that is a lot more predatory than I think what we want for our communities. Next slide. The affordability angle is important. That's why AHACO is at the table. It's why Convergence is moving it. This isn't just a path to accelerating homeownership and getting you in the door sooner, although it has that effect. It's really about making sure that that is a sustainable investment for you and your family in the long term. So you can see from this slide how we are able to kind of pull down that PITI payment. But let's go right into an example. So skip ahead again. Skip ahead. Let's go to the fun stuff. So this is Aurora. She's purely fictional. That is an AI picture. You don't know Aurora, even if she looks super familiar. But she is kind of the prototypical face of the challenge that we have here in Central Ohio when it comes to being able to break into homeownership. So she is a professional. She's a college graduate. She has a really decent income. But that comes with a really high rent payment, so she's not able to save super well, and really high student loans. So she's got a pretty high debt to income ratio coming into her home ownership era. She knows that she can make a $2,000 a month mortgage payment. That's what she's been paying in rent. If she can get a mortgage into that range, she's set. And she's got about $5,000 saved. So that's Aurora. Go to the next slide. Right now, Central Ohio's median home sale price is about $340,000. That is incredibly high. It's more than doubled in the last 10 years. By all accounts, it's continuing that really rapid ascent. So let's just hope in Aurora's favor that she's able to find a home about $100,000 less than is usual on her market, and she finds something that she's ready to put an offer in at $250,000. So on the left side of the screen, you see what a totally normal, very usual run-of-the-mill transaction is, right? She throws her $5,000 down payment into the kitty. She takes out $245,000 as a first mortgage. Based on an interest rate from about a month ago, what that means is she's going to have an overall monthly payment of about $2,300. Right off the bat, Aurora has blown out her budget. That is $300 more than she thinks she is safe for. Also, if you were to crunch this, her debt to income is about a 45%. So whether she gets this loan at all is a real question mark. Shift now. In the Buckeye Dream Share program, which is what our version of the shared appreciation mortgage is being called, same scenario, right? She still finds a home for $250,000, but now instead of taking out everything else as a first mortgage, she gets a silent second loan from the SAM for $49,000. That shrinks her first mortgage from $245,000 to just $196,000, and because of that, she's going to have a much smaller principal and interest payment. And also, because we helped her put down more than 20% down, she has eliminated PMI, and on day one, she's experiencing almost $350 worth of monthly savings. She's back into a safe place with her budget, and she's more likely to qualify for this loan because her debt to income ratios are in balance. Next slide. So, how does she get out of this transaction? What's the exit look like? So, 5 years later, Aurora has found love. Her husband already has a home. She's ready to get out of this one, and they're going to consolidate their households. Her home in those 5 years has appreciated very modestly. So, right now in Columbus, we're seeing home appreciation in the 10 to 15% per annum range. Not at all healthy, but that is what we are looking at. Let's suppose that hers just raised closer to a historical norm at 6%. So she's got a new purchaser who's willing to pay $325,000 for that house. Skip ahead. First thing she has to do is pay off that first mortgage. Let's assume it was to Jacques and JPMorganChase. Thank you, JP, for being a very good friend to Aurora and helping her get into this place. Same as she would in any other traditional loan. She also has to pay off the Buckeye Dream Share. That was the $49,000 that was originally lent to her. Again, this is hard debt. It is not revolutionary. The thing that becomes different is instead of having paid 6, 7, 8, 9% interest on that second loan, she wasn't paying any principal and interest during that time. And instead, she has to share a portion of the appreciation that she has earned with that nonprofit administrator. And in this case, that's going to be a $15,000 share. So Aurora walks away from this transaction with $76,000 in her pocket. Not a bad day at all. Next slide. With that said, though, that is $18,000 less appreciation she would have earned than in a traditional mortgage setting because she had to give some of it to the nonprofit that helped her. So she came out less wealthy than she would have otherwise. If you're saying, hey, shoot, this sounds a whole lot like a land trust, you're right. We keep calling it the land trust in the sky because generally it is a land trust that can float from house to house to house. The flip side of that is, though, because she paid less principal and interest, and because she didn't have to pay PMI at all during those last 5 years, she actually saved $28,000 over the term of her loan. So even though she has to share some of this with a nonprofit, she's still coming out 10 grand ahead. Next slide. We want to make sure, because this is a very new transaction style for Ohio, that every consumer who moves into a SAM has a lot of support to understand and wrap their heads around that transaction. So it requires mandatory housing counseling, not just before purchase, but at 3 months, or pardon me, 6 months, and also 3 years post-purchase. One of the neat things about the SAM is the sooner you can get out of it, the less money you have to share with the administrator. So we want you to have really strong post-purchase support to know as soon as that refi potential comes in and as soon as those interest rates drop down, that you're financing us out of the deal. We also have limits on the amount of appreciation that you would have to share with that nonprofit. We have survived the last few years in a very Intel-ish environment where it is not uncommon for something wild and fantastic to happen and the house next door to shoot up in value 100 times. That would be an unfair amount for an administrator to share. So it is capped at 3 times. And then also, it's always important to know if there were some sort of black swan event and the market were to crash tomorrow. The original loan that Aurora took out, that $49,000, is hard debt and she has to pay it back. But if that home does not appreciate, there is no appreciation to sell. It essentially converts to a zero interest loan. So everybody is a little bit more protected than they would be otherwise. Next slide. I want to share our gratitude for the Central Ohio Community Land Trust. They have been a really phenomenal partner in this program because they've done so much in shared appreciation world already to help us understand the parameters and the things to watch out for. I also want to thank them because we know that there's about 300 Franklin County residents who are sitting on their wait list, and they just cannot build the homes fast enough to serve that need. And what they've agreed to do is allow us to work with that pipeline and say, hey guys, if you're already down for some shared appreciation, let me show you this new tool we've got and decide if it's right for you. Which means that we think we have a borrower pipeline day one out of the gate that's really, really strong. Next slide. I won't go into this too much because this is really what comes next. Where we are in the process is that we are working to identify a local nonprofit administrator, somebody who is really good at home ownership, who ideally has internal housing counseling support to be able to make that a really easily flow for the borrower. But as soon as we're able to do that and to finish the policies and procedures, our next step is to go and raise the resources. And what we are hoping to be able to do is to bring in about $12 million, which would fund about 200 home buyers as our pilot program. We think that there's a lot of really great ways to do that. Ideally, what we're going to try and do is blend a little bit of investment with a little bit of grant to make sure it's a nice, stable loan fund in the totality. Next slide. Frequently asked questions. I'm not going to go through these too awful much. But if we're sharing slides after, I wanted to make sure that we addressed them. And you can go on to what I believe is the last slide, which is my contact information, just to say thank you guys for letting me share. And also, if you have $12 million, I would really like to talk to you.
Carly, thank you. Super exciting. We're gonna just have to like kind of do a 1 year later webinar with all of you so you can continue to share out outcomes and successes. This has been great. Thank you. Jacques, I wanted to give you the opportunity to make some offer some responses or comments before we open up the floor for Q&A. Is there anything that you'd like to start off with?
Yeah, I mean, no surprise. I knew there was just going to be a ton of great information from these, rock star panelists. But, what I heard is that, we have some significant challenges when it comes to, getting existing folks and potential folks into homeownership. But I also heard there's some great things out there, some tools and resources on the horizon. So Ashley, helping us keep those predatory buyers out of Franklinton. I live in Franklinton, so I have a vested interest there. As your neighbor, Valerie, who knew heirs property was the biggest issue as it is in some other markets around the country. So glad you put on your data hat and you're really uncovering that. And I would love to hear more about how that looks around the state as well. Greg, you were an important part of the lending ecosystem. So love what you're doing up there in Northeast Ohio and then being able to expand those products up there. Carly, I mean, just being at the heart of this issue and to be able to respond with an innovative product that, I've been hearing, like to your point, we've been hearing about this model for a while, but really, really putting some, some structure around it. So I'll just close by saying, for me, at JPMorganChase, once again, we're committed to being a part of the solution. So we're proud to partner with organizations like, those on the panel. I'm sure many of you that are out there today, just so we can help get more Ohioans, into homeownership, if that's the right thing for them to create those more resilient communities. So, Allison, I'll turn it back over to you to see some great questions that we have out there.
Wonderful. Well, thank you, Jacques. And yeah, super, just love everything that we've covered today. So I'm going to start working through the questions in the chat. I have some of my own, but the first question that's in the chat, oh gosh, and then it's going to start moving on me. Okay, so one question is, this one's directed to Ashley. How do you evaluate the effectiveness of the canvassing and how are you defining results?
Yes, great question. Sorry, I should have included this response in my presentation. So this is something that's a little bit hard to measure. So I can share some results that we've seen like post canvassing. So one of the things that we look at is data on our resource websites after a canvas. And so we use Google Analytics to track the page views and the traffic to both franklinton.org and hilltopusa.org. And we typically do see a spike in page views after a canvas, which is good. That means people are hopefully looking through the bag or the door hangers that are left on their door and then going to the resource guides. So that's one way that we've tracked it. Other ways, so one of the flyers that we included was for our financial literacy program, the money management program that I talked about previously. And we saw an increase of signups after. So I believe after one canvas, we had like 3 to 4 people sign up for our program interest list. So again, kind of relating that to like, okay, they received the flyer and then they signed up there. And then in terms of the predatory buyer, That one was like the hardest one to track because like we got a few calls and then so did legal aid that we think came from those, but sometimes it's hard to track exactly how people find FDA of like, are they finding FDA like because like the housing CDC or are they finding FDA because of the resource website and in which capacity? So we definitely that is one of the hardest things to track, but we can tell based on the things that I mentioned that people are looking through the materials. So hopefully that kind of answers your question, but it's definitely a challenge.
Oh, Ashley, that's very helpful. Thank you. Amanda King notes that this program rules and is very excited to have it here in Columbus. I think that's referring to the proposed shared the SAM. All right. I'm looking to see if there's other questions here. I guess one question I had, I wanted to ask Carly, can you just confirm the geography that you anticipate this program working in, at least initially?
Yeah, on a pilot basis, it would be limited to Franklin County. And we didn't talk a lot about it. It would not be exclusively for lower income borrowers. It goes up to, at this stage, 120% of area median income. And that's really just so that it can align easily with CRA expectations for some of our partners. I think that as we kind of blow out those pilot parameters, we'd love to see this be a much more flexible project that can really span not just geographically, but throughout our borrower range.
Awesome. Thank you, Carly. All right. Our friend Sam from Oxford, also representing American Planning Association, Ohio. Sam asks, is Believe Mortgage looking to expand geographically or stay focused primarily in the Cuyahoga County region? And I think that question can be applied to a number of the different products, Greg, that you offered.
Absolutely. Good question, Sam. So as a CDFI, obviously our mission is for Northeast Ohio, but because of the fact that we are a lender license for the state of Ohio, we do lend our Believe 100 product today all throughout the state of Ohio. We are, speaking to partners within Cincinnati, Columbus, Toledo, Youngstown. So that product today is one that is supported by another CDFI self-help credit union that is based out of Durham, North Carolina. They service and then we sub-service with another CDFI out of Kentucky. And so today that product can go anywhere in the state of Ohio. And so today, if you want more information on that, please reach out. We're happy to share, where that product, we can put you in contact with our loan officers as well within the state. Right now, the Believe Mortgage, which is our flagship product, which we sell to a couple of the regional banks. That's really supported based on the counties that they want CRA credit in. And so we have talked to them about expanding, but right now that is in Northeast Ohio. So that's the product that will go down to 570. And so right now that's just really going to be in the counties that are surrounding Cleveland and Akron. And so that's going to be in Northeast Ohio only.
But you're not opposed if you can find the right partner to continue to.
Absolutely. So reach out if you are that partner that wants to do a correspondent agreement with us. Absolutely.
Thank you, Greg. Sam, I hope that answered your question. Valerie, I wanted to ask you a little bit more about, I thought your comment of like, we know this is an issue, we don't have hard data, but let's just roll up our sleeves and get in there on the heirs property. And I thought that was, I think sometimes that's really helpful. We know that we're in a moment, like let's just get her done. I am curious though, like how that data collection is going since it's so hard, it was so hard even just to project getting in there. And now that you're sort of in the process, are you getting are you able to peek behind the curtain in ways that you hadn't been prior to starting the actual work?
Yeah, I think we've kind of backed into what the data from United Way and an awesome data guy are providing for Hamilton County, showing us where we think there are likely heirs properties, confirms what we found with the cases that we've served so far. So I should mention, while we didn't have an understanding of the total number of heirs and likely heirs in the county, we were very meticulous about getting data from our legal services partners. Legal aid and pro seniors is helping on the estate plan. So we know, I should have mentioned this, we're averaging about 30% of AMI for the income level that we're serving. So this really is a way to effectively preserve home ownership for very low income families, and the average income is 26,000. Typically older Black single women households is who we're most serving. So we set up and we've got an understanding of where people live, what neighborhood or community that they're from. So we're collecting data, and now we're going to be able to target that outreach using the collection that United Way and Awesome Data Guy are collecting.
That's great. And I love you had emphasized this in your comments, but I think just underscores it how important partnerships are in making any of this work. And I think that's a thread that we heard throughout all of this, right? Is that you just can't quite do it alone, and it's whoever's at the front of the parade is makes the most sense, but that's definitely a parade of partners.
And I'll
Um,
say that it takes a lot of time, if I could just real quick. We
please.
are our HUD certified housing counseling partner on our home repair work, working in neighborhoods. Totally separately heard about the AIRS work that Lisk is doing on a national webinar. And we're developing resources for housing counselors so that they can share this information with clients, right? A toolkit throughout the country. So it really does, even if we're in a tight space, we're all very busy. So it's good to take a step back and provide education to all of our partners about all the good work we're doing.
That's a wonderful point. And yeah, I think probably carries forward on all the things that we do, right? Um, Ashley, I wanted to ask you a little bit more about the canvassing, which I think is great. So you had talked about, being sort of deliberate about where you're going, making sure you're tracking it. My question is, were you only targeting homeowners, and had you done the work ahead of time to identify this house is a homeowner, this is a rental homeowner, or were you just sort of like, let's blanket this with the hope that it gets into the right hands?
Yeah, that's a great question. That was another point I meant to mention. So we just distribute to everyone, in case well, the only ones we skip are like the lock boxes ones, like I mentioned. But we just distribute to everyone because we find that like even if they can't use the resources, they might know someone who does. I will say that through our partnership with the Envision Hilltop Advisory Committee, we were able to be like a little bit more deliberate of certain areas when we were canvassing for home ownership. So one of the canvases that we did was in the South Hilltop area, and that was specifically because they were doing a home repair program. And so we were passing out resources like right before they launched the home repair program in hopes that they would visit the resource guides and learn about the home repair program or get connected to other resources. But part of the reason the advisory committee picked like the South Hilltop area was the high rate of home ownership. So there's like a little bit of like, we'll look into like the home ownership rates, but we find that everyone can benefit from the information because they may know someone who needs it.
I love that melding of like local knowledge plus maybe a little bit of like looking at the auditor's page and like sort of that data analysis, but making sure that that local knowledge is highly present and making those decisions so you're efficient. Well, we have 2 minutes left. I wanted to ask our panelists if they had any final closing comments or thoughts that they wanted to share before I start to wind us down and remind everyone where they can find the resources that were shared today during today's webinar. So um, let's see, we can go in reverse order. Carly, is there anything that you wanted to share? And you can also say pass if you want.
Oh, I will absolutely never pass on that
I,
opportunity.
it's great. Hit
Uh,
us up.
so yeah, Convergence Columbus is an open coalition. There's no membership fee, there's no expectation. You just come in and you join whatever kind of work stream or committee that you think is exciting for you and builds on your expertise. So I would welcome everyone who's got an interest in being part of whatever comes next for that to join. And I will put the Bloom 614 website into the chat so that you can get in touch. And thank you.
Thank you. Greg, final thoughts from you or comments?
Just want to thank JPMorganChase and Josh and for GOPC for putting this on. This is, again, just a great way to allow all of us, right, as partners to get together and try to really penetrate all the things that we're working on because we can't do it alone, as you said, Allison. So thank you for the time. We appreciate that.
Thank you. Valerie, any final comments or thoughts?
I want to pull on something Ashley said. This information is only as good as people that know about it. So folks on the call, please, share this information out with your networks to make sure people know about resources that are available.
Love it. Ashley.
Thank you to Allison and Jacques for being our hosts today and the other panelists. And yeah, just try to volunteer in your community, whether that be like joining a canvassing event, um, volunteering in a trash cleanup on an area commission. So just find different ways to get engaged and share resources.
Thank you. And Jacques, final word before I tell everyone again where they can find the materials.
I just thank you, and to all the folks on the panel, and to you, Allison, and everyone listening in, just for being resilient in the face of everything that's going on out there with all the challenges. So just thank you.
Agreed. Thank you. Well, everyone, thank you for joining us today. Sorry, we're running a minute over. Again, you can find this webinar. We will put it on the GOPC YouTube channel. We will also post it to our website. We'll also post the slide deck there so you can find people's contact information. We'll get that all up in the next few days, as early, it may be as late as early next week, but it'll be up there, and we'll make sure to send you an email so that you are aware. We'll also be sending you a survey so we can continue to do these in ways that are helpful for you all. But until then, thanks so much for your time, panelists. Thank you for your expertise. We'll have a great afternoon, everyone. Take care. Bye-bye.